San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the U.S. Department of Justice outlines its case against Huawei with formal charges, accusing China's largest smartphone maker of fraud and stealing trade secrets. Plus, corporate America is pointing the finger at China for disappointing results. NVIDIA cutting its outlook, joining Apple's warnings at the start of the year. Is it a bad sign for earnings to come? And Facebook has committed roughly $1 billion to its video service Watch. So why hasn't it taken off with advertisers? But first, to our lead, U.S. prosecutors filed criminal charges against Huawei, alleging it stole trade secrets from an American rival and committed bank fraud by doing business with Iran. Huawei has been the target of a broad U.S. crackdown, including allegations it sells telecom equipment that could be used by the Chinese Communist Party for spying. The action comes 2 days before a pivotal round of trade talks between the U.S. and China. Joining us now to discuss, in Washington, we've got Bloomberg's Tom Schoenberg, who covers financial investigations. Also with us here in San Francisco, Bloomberg Tech's Selena Wang, who's been following Huawei. So this certainly marks an escalation in tension. Selena, what is the significance now that we know the specifics of the U.S. charges? And we found out from the U.S. officials in this ongoing presser that this investigation has been going on for years, and this covers quite a few areas. So one area is this IP theft issue, allegations that they stole intellectual property from T-Mobile, that photographs and even a piece of a robot that helps mimic smartphone use was stolen from T-Mobile. That's part of it. Another part of it is the arrest of CFO Min Wanzhou, and she was arrested several months ago, and they're charging that she was conspiring to commit bank fraud, that they had used this subsidiary called Skycom to root deals with Iran, breaking U.S. sanctions against Iran. So now there are there's 13-count indictment in Brooklyn, and 2 of its affiliates face charges in Washington state. So a lot of information that we're just hearing now. And the deadline for the United States to send an extradition request for Min Wanzhou to Canada to bring her back to the United States is coming up in a couple of days. Tom, what do you make of the details here now that we know the specifics of what the U.S. is moving forward with in terms of formal charges?
Yeah, I think it's a very serious case. It was done by the same group that brought the case against HSBC a few years ago, in which they were accused of laundering money for Mexican drug cartels and violating U.S. sanctions. And these sanction cases, I think that's one of the most feared cases kind of brought by the Justice Department against a company, especially if they have that evidence. And what they're alleging here is that Huawei essentially hid the fact that they were kind of still doing business with an affiliate in Iran in violation of U.S. sanctions.
They also say that Huawei moved witnesses back to China so that they could avoid penalty. Selena, talk to us about the broader context. I mean, it's been a busy day for Huawei, some not good news for them coming out of Europe and around the world. Right, and in addition to that, there were also charges that they were actually giving bonuses to employees that were stealing some of these trade secrets. And Huawei has really been dealing with a 360-degree assault on its business. There are many developed countries, and through the pressure of the United States, to stop using Huawei's telecoms equipment. And for many years, there wasn't a lot of solid evidence against what exactly Huawei was doing wrong, and part of that is because classified intelligence like that shouldn't be revealed. And so a big argument is how much of this is national security risk and how much of this is a concern that Huawei is becoming a leading developer of this next generation of wireless technology, as well as now becoming the world's second largest smartphone maker ahead of Apple. And it seems to be with this announcement and the increasing evidence that it's a mix of both of those reasons. And it's certainly a concern of the U.S. government that as their 5G spreads to other nations around the world, that it's a threat to democracy and Western ideals. So, Tom, let's try to pick that apart, because the U.S. has long feared that Huawei makes this equipment that the Chinese government could use to spy on the United States. However, as I understand it, there's no concrete evidence that that equipment actually can or ever has been used for spying. The charges that were announced today have nothing to do with that, correct?
Yes, as far, from everything I've seen, and I'm still waiting to see the official documents in the case, but so far, we haven't seen anything related to that. I will note that when the Justice Department in November announced like a big broad prosecutorial effort on cases related to China, one of the things they noted there was specifically looking for cases where the 5G network could come into play, in which there was, anything they could sort of develop in that space. So it's on the minds of U.S. prosecutors to be looking for that. It may not be here quite yet.
Now, meantime, Selena, these trade talks getting underway later this week. This is a critical round of talks, and this ratchets up the level of aggression that the United States is demonstrating.
It certainly increases the dark clouds that are hanging over everybody's heads as these trade talks happen. It's unclear what sort of retaliation there will be from the Chinese government, if talks will break down, how they'll continue to move forward. There's been so much conflicting evidence about how the trade talks are doing. But I also think it's important to set this against a broader context. And Huawei has denied all of these accusations. We've seen the billionaire founder come out and personally say that they do not engage with the Chinese government and that they would not provide information, sensitive information on clients if this were to ever happen. But it's important to note that from the U.S. administration's perspective, the past isn't even so much of an issue as the future, is that there could be backdoors and there could be a big issue, and that's why they're taking these steps now.
Now, Tom, walk us through the timeline. Now that we know these charges and we have the deadline for that extradition request in a couple of days, what is next?
Well, now they have to be able to have served the company this indictment, which, at times, sort of, when you're dealing with Chinese companies, some of the more sort of rudimentary actions in a criminal case can be, take longer than normal. But I really think that extradition is going to be a big piece of this, in being able to see if they're able to successfully extradite her.
And Selena, meantime, more broadly, Huawei is one of the top when it comes to equipment in 5G, which is what all countries are trying to move towards. In Europe, they just came out with a report saying if there's a ban on Huawei, we will seriously be at risk of falling behind, because we can't buy their equipment.
And that's a very interesting dimension to all of this, is that Huawei, they're really good at what they do, and they provide it much cheaper than a lot of the other makers. So for many countries, especially in the developing world, Huawei is the best option for them. And of course, that is a concern of the U.S. government, that it works well, it's cheap, and so it's going to be able to infiltrate all of these other countries. And now Huawei, from their perspective, if they are blocked out of certain countries, they're just going to double down in these developed markets that really rely on Huawei technology. So it will really be interesting to see how this continues to play out, which countries agree to the U.S.'s demands that they no longer use Huawei equipment, but we have yet to see how it'll turn out.
All right, Selena Wang, Tom Schoenberg for Bloomberg. Lots to keep following here. We will bring you all the very latest as we have it. Now, a story we are watching, shares of Tesla fell Monday after the Financial Times reported that Saudi Arabia's sovereign wealth fund hedged most of its 4.9% stake in the car maker. The FT reports the fund still holds Tesla shares, but now faces little exposure if the stock drops. Saudi fund played a key role in CEO Elon Musk's short-lived effort to take Tesla private last fall, but the gambit fell apart after Musk failed to line up financing. Coming up, plenty of tech earnings to look ahead to this week, along with some warnings. We'll speak to the CEO of the investment firm Gerber Kawasaki about where the bright spots may be. Our conversation with Ross Gerber is next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Days ago, Netflix came out with its fourth quarter results, and they were mixed. While the streaming service added a higher than expected number of subscribers, it missed on revenue compared to analyst estimates. Since that day, the stock has been in the red, and the company is expected to add 30% fewer new users versus the first quarter of last year. My guest coming up has a substantial investment in Netflix, as well as other companies yet to report, like Apple, Amazon, Alphabet. In fact, his company has invested over $800 million in tech and media companies. He is the CEO of Gerber Kawasaki, Ross Gerber. Ross, as always, great to have you here on the show. So there have been underwhelming reports so far, not just from Netflix, but also IBM and Intel. Do you think that's a warning sign for some of these other companies that you have stakes in?
Yeah, in a way, it absolutely is. It shows that the trade war has two losers here, the United States and China. And, when you go to war with your biggest supplier and also your biggest customer, we're seeing the effects now, and it is hurting American companies. So, obviously the companies that have less exposure in China are going to outperform right now, like Amazon and Google, which aren't really allowed to do business in China. And the companies that have extensive businesses in China, like NVIDIA and Apple, are going to have to deal with the lumps that come with this. Looks like a pretty decent slowdown in China.
We're going to dig into NVIDIA later in the show, but I do want to talk now about Apple. Of course, we know that Apple cut its forecast very dramatically. So what does that mean for any potential upside that's left?
Well, I think there is upside now because the stock has, moved down what we think to a valuation that doesn't account for the long-term cash flow potential and as well as the real growth of their services business. I mean, it's clear that Apple as a product company has reached its maximum potential, but as a services company, it's in inning 2 or 3. And, if Apple does anything bold here in services, instead of just sticking its little toe in, I think they could make a big impact and grow the business substantially, even more so than they are today.
So if anyone comes out ahead, you think Amazon, you think Google, who else?
Well, our basic premise is that, basically 4 or 5 companies have just massive monopoly power over their respective areas of business, like Google, for example, in online advertising. And so these positions can't be changed without government intervention. So as these companies continue, like Netflix on its global dominance of the entertainment industry, as this continues without any interference, we expect these companies to continue to grow profits, users, and this could go on and on for a long, long time. So the only risk to many of these companies is really government intervention.
Well, what about the risk of government intervention? We've got Congress looking at potential privacy laws, potential regulation that would impact Google, impact Facebook. There's also a potential regulatory threat against Amazon, which is getting quite big and has attracted the ire of the president.
Right. I mean, one option is just to rent out a lot of rooms in the Trump Hotel in D.C., and hopefully that'll work. But the other option, is certainly, we don't think the U.S. government can beat these tech companies, but we do think the Europeans can. The European approach to consumer protections is completely different than the United States in every industry, and we're seeing that effect already on these companies. So we actually look to our European friends to really enforce these kind of things a lot more than here in the United States. But we do think this is a risk. It's something that Microsoft dealt with, a decade and a half ago, and it really kind of hurt the company for almost a decade before it started growing again. So, this is a legitimate risk and one that probably should be looked at because they are such dominant forces. But as an investor, you've got to own these companies for the long term at this point.
Don't see Jeff Bezos taking out any rooms at the Trump Hotel, unfortunately for you, Ross. I do want to ask for your
Hey, you might be surprised.
He
might be taking out rooms.
Well, we're not going to go there. But let's talk a little bit about Tesla. Got a question here from a viewer via the Bloomberg IB asking for your estimates for the full year for Q4 and the full year of 2019.
Well, our estimates are pretty imprecise when it comes to Tesla because obviously their business is changing so rapidly. What we expect on revenue is somewhere around $25 billion for this year. We expect them to make at least 350,000 EV cars. 100,000 of the Model S and X, and at least 250,000 Model 3s, but that might actually be low, our estimate. So we know what revenue will probably be, around $25 billion, and what we hope and expect is that they'll run either even or at a slight operating margin through the year as they continue to invest heavily into their growth, especially in China, where I think this opportunity is just so enormous. So Tesla really needs to be investing in their growth right now to stay ahead of the competition, especially in China.
But what do you make of this FT report that even the Saudi investment fund has hedged their bet on Tesla so that they're not exposed if Tesla doesn't do so hot?
You know, the Saudi investment fund is a joke. Let's be real. I mean, these people only do what they're doing for their own benefit. They're not traditional owners like BlackRock or me or somebody else. So I think they originally took their stake to try to take the company private. They failed at that. I think that, you know, they're very nervous as far as investing in things that will destroy their entire economy. So Saudi Arabia has the most to lose with Tesla's success. So it doesn't surprise that they're hedging their investment or this or that. You know, there's a lot of motivations that they work with that aren't per se economic.
And what about the layoffs at Tesla, the uncertainty around whether they can hit the same sort of production numbers that they did in the last year, and the competition that is coming from other players in electric cars?
So as far as the competition, I'll start with that. We don't really see competition in electric cars for Tesla anytime soon. The U.S. car makers make horrendous cars, and the European car makers are too busy trying to beat emissions testing and getting their CEOs out of jail and stuff versus actually building a large ability to manufacture EV cars. The real competition is coming from China with companies like BYD and companies like Geely, which, you know, really are making some good electric cars for China. And the China market shows that with over 1 million electric cars sold. But they love Tesla. It's a premium brand. So the competition, I think, will actually help Tesla. The more EVs that are of better quality that are made will convince more ICE drivers that this is a way better alternative than an ICE car. So we expect that to, you know, be a positive, not a negative. I think on the layoffs and stuff, I think that's a byproduct of the fact that Tesla's trying to run their company sustainably and profitably, not like a typical Silicon Valley startup that just burns capital like they've been doing for years. So the fact that they're showing some financial discipline here is something I'm actually really excited about. And then secondly, the purpose of the company is really to use automation as much as possible in the production line. And they struggled so much to get the production up to the levels that would keep the company alive. They had to hire so many people. So I think as they streamline production and such and make the difficult choices that are just a reality for Tesla right now, the financial situation for them is tight, so they have to run the business tight. And I think that we're seeing some of the effect of Larry Ellison on the board, you know, helping Elon make the tough decisions. He did the same thing at SpaceX. But we're seeing this at all kinds of tech companies today across the board, from Apple and everywhere else, just, you know, trimming, you know, the unnecessary stuff as we worry about the future of the economy under the Trump administration.
Now, of all the big positions that you have in tech companies, it looks like Facebook is not one of them. Why not?
That's right.
Quickly.
Well, a year ago, or about a half a year ago, I think social media has peaked. I think it's really bad for people. I think that most people are spending less time. You have a screen time app now that tells you on your phone that you're overusing this stuff, spending 3-4 hours a day staring at pictures of your friends' vacations or whatever. And people have realized that social media has morphed over to gaming now through Twitch and streaming. You know, Ninja is a huge character now. All the kids are playing Fortnite, and they're having their social media there, and they're done with this Facebook thing. So, I mean, if you ask most kids today, they don't even use Facebook, and they do use Instagram, but that doesn't bode well for Facebook long term, and I think they're just ethically corrupt there. So that was part of the decision making as well.
All right. Well, we're going to talk more about gaming when we get to NVIDIA later in the show. But quite a pronouncement there that kids are done with this Facebook thing. Ross Gerber of Gerber Kawasaki will be back with Ross later in the show. Coming up, cryptocurrencies are off to a rough start in 2019, as we all know. But how is this decline impacting crypto startups? That's next. This is Bloomberg. Bitcoin slump continues. Monday, the popular cryptocurrency sunk to its lowest in more than a month, dragging down Bloomberg's Galaxy Crypto Index with it. Disappointing start to the year for investors who hoped 2018's volatility was behind them. More than $400 billion in crypto market value was wiped out in the last year. Here to discuss, we've got who else but Bloomberg's Julie Verhage in New York. So, Julie, is there any end in sight to this drop?
You know, I haven't heard any good news about Bitcoin or other cryptocurrencies at this point. Something that could happen that could boost them in value again would be institutional investors suddenly wanting to get back into the game. Around this time last year, we started hearing that maybe Goldman Sachs, Barclays, and others wanted to open up trading desks around this, which obviously was something that a lot of crypto traders were excited about. They thought not only was that good to legitimize the cryptocurrency, but also meant that it might bring some more stability into the market. And I guess it kind of has brought some stability since we have been around 3,000 to 6,000 for the last few months, but I don't know that that was necessarily the stability that they were looking for at the time.
Now, I've got a chart here in the Bloomberg that shows that actually the cost to mine Bitcoin is actually higher than the value of Bitcoin, which kind of makes it a fruitless effort. The white line here is the price of Bitcoin. The blue line is the cost of electricity that it takes to actually mine the stuff. You know, what's the impact of this?
Right. So this is coming from a JP Morgan report that I believe was out last week. And this is an average. So there are some places where you could still mine Bitcoin for less than what that report is saying. I believe it was around like $4,000. So we're trading slightly below that. But obviously, if you're in a place where, you know, like electricity and whatnot costs more, where it costs you $4,000 to $5,000 to mine it, at this point, there's obviously much less incentive to continue doing that. And it's just sort of one other negative sentiment that's out there right now.
Now, there is some hope for stable coins, but what is happening to all of the digital startups that were founded based on the hope that this was going to be a huge market? Not that it won't be someday, but it's not looking good right now.
Right, exactly. I think a lot of them are waiting for, you know, broader use cases and sort of exploring that, stablecoins being one of them. We saw Coinbase raise at the end of last year. Now, their previous round had them at a valuation of around $1.6 billion, and this new one was at an $8 billion valuation, which is obviously a massive jump. So you can see a little bit of that impact. But based on people that I was talking to during the fundraising talks, there was one point where that valuation was as high as $12 billion. So you have seen some of that come back down. And then along with the story that we had about their funding round, we talked about what their sales were in 2018. And while that wasn't broken out by quarter, they did still increase from the year before. I would obviously just love to know what the actual quarter looked like, because I'm sure the bulk of that was back when, you know, the first couple of months of the year when Bitcoin was still trading around $19,000, $18,000.
All right, Bloomberg's Julie Verhage. I know you'll keep your finger on the Bitcoin pulse for us. Thank you so much, as always. Coming up, NVIDIA fell the most in 2 months after cutting its outlook for fourth quarter revenue. We'll break it down next. Plus, Logitech reported strong third quarter results. What to expect from the company as it takes on gaming. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Emily Chang in San Francisco with Heidi Stroud-Watts in Sydney and Sherry On in New York. I want to take a look at the top global tech stories of the day first. Sherry?
Yeah, let's take a look at Huawei because U.S. prosecutors filed criminal charges against the company and its CFO Meng Wanzhou as part of a broad crackdown against the Chinese smartphone maker. The U.S. alleges the company stole trade secrets from an American rival and committed a bank fraud by violating sanctions against doing business with Iran. Apple reportedly is planning a subscription service for games. According to the streaming financial news network Cheddar, the company began talks with game developers in the second half of last year. It's not certain how much Apple would charge for a subscription or what kind of games it would offer. And shares of NVIDIA took a tumble in Monday's session. The maker of 3D graphics processors and related software has cut its fourth quarter revenue forecast. NVIDIA says gaming and data center sales were below expectations due to a weakening global economy, especially in China. And those are the top global tech stories today. Emily.
Thank you, Sherry. I want to stick with NVIDIA now and bring back Ross Gerber, CEO of Gerber Kawasaki in LA. Ross, of course, you've got a big position in NVIDIA, as we discussed. Are you preparing for long-term pain here?
Well, it feels like the pain already happened, right? I mean, we're down from 2-something down into 135 range. So I think the price clearly reflects the issues that they're facing, which are legitimate.
So why do you think this won't be longer term then?
Well, I think there's two things. One is, do we get a resolution of trade issues with China, which would sort of give investors as well as capital more confidence in making investments and growing the Chinese economy will be a lot easier if we can get through this. We do think the Trump administration has kind of manufactured this slowdown, possibly, even the first Chinese recession ever, right? Or who knows? We've created these problems for ourselves, and the issues is whether we're going to keep digging the hole deeper or whether we're going to solve them. And I'm hoping that we solve them, but I have little faith in the art of the deal. So we're playing it pretty conservative right now.
But Ross, I mean, best case scenario, you can solve the trade war with some short-term wins or whatever. But I think there'd be nary an economist who would say that China doesn't have structural growth problems of its own. Without the trade war, it's still an economy that is coming down in terms of the pace of growth we've seen over the past 2 decades. That's undeniable. I mean, that market is something that's changing for suppliers and for companies like NVIDIA that have been used to the breakneck pace of demand.
Right, but there's a couple of things working behind the scenes, like the end of China's shadow banking system that they started over a year ago. By pulling back a lot of these, sort of ridiculous lending things that were sort of under the surface. This is one of the reasons the Chinese economy has slowed, is because, they've taken steps to actually make the economy more structurally sound through attacking these shadow banking systems. And so that's one of the reasons we're seeing the slowdown, is because there's less of this kind of ridiculous lending into things that will never make money. But I think when you're China and you look at the size of their economy and how fast the average individual has grown their income over the last 5 years or 10 years, this is the most exciting market in the world. And growing at 5% or 6% or even 4% is a reality for China over time as they mature. But these are still huge numbers, and they will be the largest economy in the world in the next 5, maybe less, years. And we have to accept that. But with this, I think there's tremendous opportunity in China, and I don't think they're headed for some major collapse or anything.
That said,
we're making investments now.
To Heidi's point, Ross, the IMF has warned the global economy is slowing down much faster than expected. How do you think CEOs are going to react to this, even if they do get some short-term relief?
Well, I think, ultimately China has already begun stimulating the market with different, methods. China, remember, they can do whatever they want. It's not like they have separation of powers and a Fed and all this kind of stuff. I mean, the truth is that China can just add more liquidity to the market if they want. They can do whatever they need to do to try to goose growth. But I think ultimately, when you look at China as a upwardly mobile society and how advanced in technology they've become, how advanced their cities are today, I have little fear, actually, that China will be successful in the future. I think that, once again, we're making investments right now into China, into some of the Chinese companies that have come down in value, because we think these are very dominant companies. And so I do think this is a growing pain for China that was sort of bound to come, but I think their leadership is very good, and the people are very happy with it. So I think it'll be okay.
Russ, you're fairly optimistic that a deal will be struck on China-US trade. I'm curious whether that faith has been shaken a little bit given the developments of earlier today, these indictments against Huawei, the criminal charges, what's seen as an escalation just a couple of days before the next round of trade talks. Are you concerned?
Well, I once again, I don't agree with the Trump administration's methods of negotiations, which are basically heavy-handed, right? This is not a coincidental timing of these charges and everything that's going on with Huawei. So I think that I have little faith in the Trump administration's ability to do a deal. But what I do have faith in is the need for both Xi and and Trump to get a win here and to stabilize both of our economies before we really see a global recession in the next year or two if this stuff doesn't get worked out. And then that's when people start to question the leadership, not only in China, but also here in the United States. And we've got an election year coming. So I can't imagine with an election year coming and how poorly the Republicans have done that they're not pushing to resolve these issues, get refocused back on growth and all the positive that can happen from two of the major economies in the world working together. Are they smart enough to do this? Certainly the Chinese are smart enough to get it, but once again, we're relying on what I consider very unintelligent people to represent us. So I'm not confident. I think greed might overwhelm intelligence here.
Well, it's also a longer-term issue, isn't it? I mean, whether you look at this, the Huawei situation as legitimate concerns over security, or whether it's part of a broader, attempt to curtail the rise of Chinese tech, is there a real concern that it's going to be very difficult for companies like NVIDIA, but also Huawei and ZTE, which was mentioned in the press conference today, to be doing business with the largest market in the world?
Well, I think it's a new day for China. I think Huawei is guilty for what they're being charged for. I think they've been abusing a lot of things for a long time, and technology and theft and certainly going, I mean, Iran is certainly getting things from people, and it's definitely China. So, I think it's great that we're enforcing this. I question the timing and the approach. They certainly have taken a very dangerous approach to dealing with this issue. But I do think the way China's treated U.S. tech companies and the way that they've hurt companies like Amazon from being able to do business in China while they built up their own Amazon, it's the same kind of game. So if we're going to play the same game back with them, they should expect that. So we are in a trade war, and this is part of the trade war, and none of this ultimately works out good economically. Maybe we can get a deal. And once again, I'm still hopeful greed will outpace, stupidity here. But it's hope, and I hate investing on hope. So we're just playing it very conservative right now and looking for opportunities when things get too cheap, like maybe NVIDIA in here.
Ross, really appreciate your time with us. Ross Gerber of Gerber Kawasaki joining us there. Thank you so much for your time. Well, lots more ahead, so do stay with us. This is Bloomberg.
Dropbox has acquired HelloSign for $230 million in cash. HelloSign is an e-signature software company that counts Instagram and Lyft among its customers. The deal is expected to close this quarter, and Dropbox says HelloSign will continue to operate independently. Logitech beat third quarter earnings estimates Tuesday, attributing much of its success to the rise of esports. The company reported $864 million in sales the last quarter, with a 23% jump in its gaming business. The company has attempted to diversify its offerings in recent years as PC sales declined, while mobile and cloud services gained popularity. Today, gaming is Logitech's largest division, producing $500 million in net sales in the last 3 quarters alone. CEO Bracken Darrell joins us now to discuss. So you actually took over this company when it was at a critical point and reprioritized gaming. Why?
Well, I have 3 kids, and all 3 of them were gamers, and they were right in the strike zone. And before I joined the company, my kids said, "Dad, Logitech's a great company, but their products aren't as good as they used to be." And so when I joined, I immediately said, where's the gaming group? And it was 4 people. And so we changed that right away, and we have a great team.
How big is the gaming group now?
I wouldn't even hazard a guess. I mean, I wouldn't in public, but it would be well in the hundreds.
So you still make the keyboards and mice that you did in the early days, but now you're making more of this equipment for games.
Yeah,
right?
exactly.
Controllers, keyboards, headsets, speakers.
Right. And gaming is, I mean, in a way, the core business, which is actually quite healthy, it grew 13% this quarter. The core business of mice and keyboards and headsets is really the same thing you see in the gaming business. It's just that it's much higher spec. It's most increasingly wireless, super high quality sensors, and it's designed for gamers. So it's that business. Plus, we also make things for console gaming, which are headsets mostly today. We're getting into the controller business. And then we're in simulation, where you can feel like you're driving a real race car in a simulation game, or if you're really adventurous, you can drive a farm sim a simulator for farming.
Then does the health of the company depend on the health of the gaming industry? And is that a concern given China's recent crackdown on gaming in particular and just the health of the global economy right now?
Well, we've gone from when I first joined, I think we had 4 business groups. Now we have about 13. So we're increasing our portfolio all the time. We're a lot more than just gaming. We are in gaming, and gaming's on a secular growth curve that will go on forever. It'll be the biggest spectator sport, I believe, within the next 20 years. But even besides gaming, we're also very big in video collaboration now, video conferencing. We make video conferencing equipment for rooms of all sizes now. That's our 3rd biggest business. And of course, our PC peripherals business is very strong. And then we're entering new things all the time.
What's the outlook for esports?
Esports is fantastic. What's happening in esports is for most people under the age of, under the age of say 25, they realize this, but almost everybody's either playing or watching or both. If you're over the age of 35 or 40, you're like, what is this esports thing? Is this a craze? It's absolutely not a craze. These people they're playing more and more games, and they're playing them longer, and they're going to keep growing, and they're going to grow up, and their kids are going to play. So it's going to be big.
How is your strategy being impacted by the trade war and the concerns about the Chinese economy?
This doesn't even touch our strategy. It touches the tactics and the operations on the way we go to market, or the way we bring things to market. So we do a lot of manufacturing. We have our own factory in China, but we also manufacture in other people's factories in China. And in this case, what we will do is we're used to moving things in and out of our own factory. So we're just moving things into other factories, some of them outside of China. And we're, where we can, just lowering our costs overall. And then if we need to raise prices, if we have to, we will. So
what's the volume of manufacturing that you're moving outside of China?
It's relatively minimal because the U.S. business is only about, our total AMR business is about 35% of the total business now. U.S. within that would be about 28%, and it's about half of that, so it's small.
If you need to raise prices, isn't that a concern for the business?
Yeah, although we're generally the biggest player in most of our categories, so that gives us some pricing power. And everybody we compete with is in the same boat, so they're going to have to raise prices too, probably. Who knows?
Do the trade tensions have you thinking any differently about acquisitions and M&A?
I was in a dinner the other night with some other CEOs, and that question came up, and no, it doesn't for us at all. It's I think it's probably dimmed the overall market in general and made people a little more conservative, which makes things even more attractive from a pricing standpoint. So no, it hasn't made us think any different about it. We're still thinking about it and looking all the time.
Now, some of the big consumer tech companies have been increasingly getting into consumer-facing accessories like Apple,
absolutely,
Facebook, Google, Amazon.
Yeah.
Is that a threat to your business?
I think our general strategy and choice set is we try to go into things that are really not important to them strategically. If they're in them to finish off an experience that they'd like us to finish off too and do a good job in. So no, it's not a threat, but it does shape the directions we go in.
All right, Bracken Darrow, Logitech CEO. Thanks so much.
Thank you very much
for stopping by.
Thank you.
Good to have you. Good thing you have smart kids, too. All right,
I do.
Coming up, he used to lobby people for their votes. Now he's lobbying the EU on Facebook's behalf. We look at what changes Nick Clegg says are in store for Facebook. Next. And still ahead, what are the expectations as Apple gears up to report its quarterly results, and has the tech giant managed expectations? This is Bloomberg. As we prepare for Facebook's fourth quarter results Wednesday, equity analysts are expecting a revenue surge, according to estimates and data compiled by Bloomberg. But there is one corner of the Facebook universe that remains under the radar, and that would be its video platform, dubbed Facebook Watch. eMarketer estimates that while Facebook will take in close to double YouTube's $4 billion in video ad sales, Watch makes up just a single-digit % of that total. For more on Watch and other Facebook news, we've got who else but Bloomberg Tech Sarah Fryer, who covers Facebook for us. So what's happening with Facebook Watch, which made a big splash, but there are a lot of questions about where it's been.
So what's interesting about Facebook Watch is in the beginning, in 2016, when this was conceived, it was more about creating a different way for for people to use Facebook. One of the things that we'll be hearing more about this week during earnings is how Facebook has really reached a saturation point around the world in terms of global usage in its biggest ad markets. So Watch was supposed to get people to use Facebook in the more lounge-like experience, like when you're cuddled up in your couch watching Netflix, maybe you would want to watch Facebook instead. So far, that has not happened. Facebook Watch has a minority of Facebook's users. It has not had any really big hits, and really the company is not getting to the point where they're competing head-to-head with YouTube the way they envisioned they would, at least not yet.
So what's Facebook saying about it?
Facebook is saying that they consider it a success, that it's early days, that they know that there's consumer behavior to have this kind of active, intentional viewing experience, but that they haven't really gotten there yet before. One thing that's really interesting that my sources told me about this whole thing is back in 2016 when this was conceived, Facebook was taking an average of 45 minutes of users' time per day, but that was split up into little moments, less than 90-second sessions on average. People were looking at Facebook while they were waiting in line or waiting for the check. It was these moments of the day that in aggregate turned into an amazing, gigantic global advertising business, but they don't have a lot of sit-down, intentional viewing. It's more passive.
Now, with results coming up, despite all the bad news about Facebook, analysts are still expecting the biggest profit ever in a single quarter, right?
Well, Facebook has so many options beyond Facebook, beyond Watch. This is a humongous business now with the likes of Instagram and Facebook Messenger. And, they're starting slowly to monetize WhatsApp too. Most of the growth I think we'll probably still see from the main Facebook app, which is continuing to grow in emerging markets despite the controversies here in the US. What we'll be wanting to see, though, is whether those main markets have really reached a saturation point in terms of users in the US and Europe and other places like that.
Right. Now, meantime, Nick Clegg, the new head of policy and comms, is on board, big UK former political figure. What does he bring to the table?
He is going to try to be the independent voice at the top of Facebook, telling them, here's what's going to work, here's what's not going to work when you talk to regulators, when you talk to the public, here's what people don't like about you guys. Facebook has had a big problem with not understanding how the public views how they work and how they need to get better. And so maybe he'll bridge the gap. But so far, it looks like he is out there kind of touting the same solutions that Zuckerberg has touted in the past, which is a more independent oversight of Facebook content policies and an expansion of the same tactics they used around the 2018 midterm elections.
There's Nick Clegg in his former life as a UK politicker. Meantime, Snap, in search of new executives, the CFO recently left. They've hired or appointed an interim CEO, Laura Sweet. Do you know her?
She is one of the rising stars at Snap. I know there's been a lot of turnaround at the top there, so people can rise quite quickly. But, she's an interim option. They have said that they are going to initiate a search. So we still don't know who's going to be the long-term CFO at Snap. Tim Stone was in the role for much less than a year. So it's going to be incumbent on them to find somebody who can really have a more stable approach with Wall Street. There's been a lot of volatility with that stock.
All right. I know you'll keep us honest. Sarah Fryer, who covers Snap and Facebook for us. Thank you for stopping by. And Apple reports Tuesday investors are already well aware the company won't hit its initial revenue forecast. Bloomberg's Mark Gurman looks at how Apple went from trillion-dollar darling to downgrading its earnings outlook for the holiday season.
In August 2018, Apple became the first publicly traded U.S. company to top a valuation of $1 trillion, but a lot's happened since then. In November, the company reported that revenues beat estimates. More importantly, Apple forecasted strong growth for the holiday quarter, when, presumably, iPhones, iPads, and Apple Watches would be flying off the shelves. And then Apple's call with analysts began. The iPhone maker's CFO quickly announced that the company would stop reporting how many iPhones, iPads, and Macs it sells each quarter. Some analysts began to believe that meant that something was amiss. But still, the company had forecast revenues for the holiday quarter of between $89 and $93 billion. But those analysts that feared the worst were proven right. On January 2nd, Apple CEO Tim Cook announced that the company was cutting its revenue forecast down to $84 billion. On Tuesday, we'll find out how accurate that prediction was when Apple announces its final numbers for the first quarter. When it cut its forecast, Apple blamed lower than expected iPhone sales, particularly in China. It seems that consumers who bought the iPhone X for $1,000 last year didn't think that an upgrade to the XS was worth another $1,000. The iPhone XR also didn't seem to pull in enough people looking for an upgrade from older phones. But Apple plans to turn that around. It's planning larger changes for the iPhone this year and even bigger changes with 5G for the iPhone in 2020. There's also an augmented reality headset in the works, new software changes for the iPad coming, and a switch to Macs with Apple-designed processors. I'm Mark Gurman for Bloomberg News in Los Angeles.
Mark Gurman all over Apple for us, as always. That does it for this edition of Bloomberg Technology. Tomorrow's show, we will have full coverage and analysis of Apple's fourth quarter results. We'll be speaking with Dan Ives at Wedbush, Horace Dedu of Asimco, and much, much more. And we're, of course, live streaming on Twitter. You can check us out at Technology. Be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.